Techtronic industry has always been able to successfully identify its core competencies, expand into targeted geographies, and at the same time embrace innovation. Your company has given us the task of achieving an attractive and sustainable 8% growth rate by growing into Asia. We believe that we can do this via our 3I strategy. Good afternoon, everyone. I'm Dogan, and together with me is Olivia, Chow, and Alison. Together, we are Code Consulting.
So now, let us start by first understanding your business model. Your revenue comes from two key segments, your power equipment, as well as your floor care appliances. Your power equipment targets two groups of end consumers, the B2B segment as well as the B2C customers. With this large range of products, you have managed to establish a strong market presence in the United States, Western Europe, and increasingly in Australia. And these markets have allowed you to achieve a historical CAGR of 8%. But looking forward, how can you continue to enjoy the sustainable and attractive growth rates? You have to look beyond your current markets. And we agree with your company's direction to wanting to expand into Asia because of two key reasons. Firstly, Asia has the fastest growing power tools market, with it set to value at 10.6 billion by 2025, making it the second largest market, overtaking Western Europe. But currently, your company has a weak existing presence, with only less than 1% of your revenue coming from Asia. So now the key question becomes, how can you expand into Asia? But before we talk about your expansion strategy, we have to take into account three key considerations. Firstly, you have a very defined value proposition. This means to say that your products only appeal to customers that appreciate this increased productivity through power tools, safety features, and they are willing to pay a price premium for this. Take, for example, your brand, Milwaukee. They are priced at a premium, but they are still able to grow at more than 20%. So the implication is that in identifying the right countries in Asia to enter into, you have to select countries that appreciate this increased productivity through power tools. Secondly, different countries in Asia have very different market structures and very different customer needs. So you have to tailor your approach to enter into these markets. For example, in US, you understand that customers shop through large home centers, and therefore you distribute your products through exclusive distributorship in Home Depot. But in Europe, because customers don't shop through large home centers, you distribute your products by going into retailers and specialty stores. So as you look into Asia, you have to understand the different customer needs before you tailor a right approach to enter these markets. Lastly, there is strong competition present that continuously push your company to innovate your products so as you can defend your market share and continue to capture more market share. So even as you establish your brand awareness in these new Asian countries, you have to think about how you can continuously innovate so that you can gain this market leadership and grow sustainably in the long run. So these three considerations shows that you need to identify the right market, you need to tailor your entry method, and you need to innovate. Code Consulting will now recommend you our 3I strategy. I, to identify the key growth market, and in terms of identifying the right customers and the right country. Second, to infiltrate the market through a tailored approach, and this will come with our push and pull strategy. And lastly, to innovate for long-term success, which we will recommend through an accelerator program. So now, without further ado, I'll allow my teammate to talk about identifying the key growth market.
In order to identify the best market to go into, we need to first take a step back and understand the needs of the Asian consumers. In order to do so, we have done a product portfolio analysis, and we see that your products are generally split into two categories, the power tools as well as the floor care. We recommend that you push for the power tool product category, and this is due to two key reasons. Firstly, the power tool product category is growing at a much faster CAGR compared to the floor care appliance. And secondly, there's stiff competition within the floor care appliance due to the Asian consumers' preference towards traditional and affordable floor care. After identifying the power tools as a product that we want to push into Asia, we then take a step back and understand and segment our consumers in Asia. We segmented your consumers into we segmented your consumers into two categories, the B2B as well as the B2C. For the B2B consumers, we are referring to consumers who are your distributors, as well as end users who are running businesses that require your power tools. And as for the B2C customers, we are referring to customers who are using your construction tools for their DIY projects. And we believe that the right way forward is to actually cater and focus on the B2B customers. This is due to three key reasons. Number one, unattractive market size and growth in the B2C segment. In our analysis, we see that 77% of the sales breakdown actually comes from the B2B line segment, and this is even more skewed compared to the world sales breakdown. Secondly, we see that the world market value for the Asian B2C market is only 5%, and this, compared to the 17% in the B2B segment, is a much larger difference, and we believe that the B2B segment is indeed more attractive and a more sizable market to go after. And lastly, the growth rates in the B2C segment is actually slower than the overall world industry growth, world power tool industry growth rate. The next reason as to why we should focus on the B2B customers is because of the negative cultural factors towards the B2C amongst the B2C customer segments. And we draw two key insights from this point. Point number one is the fact that there's a correlation between leisure time and DIY and the expenditure on DIY construction tools. We actually got this through a report done by Euromonitor, and we see that as Asians generally have less leisure time, they actually spend less on DIY construction tools. The second insight that we drew upon is that there's a general negative stereotyping towards the DIY construction and the construction industry as a whole. This is due to the fact that Asians associate the construction industry as a labor-intensive industry, and is associated with a low level of education. As such, Asians tend to shun away from the DIY construction tools in order to save face. The third reason that we think we should be focusing on the B2B customer is because of unattractive profit margins. This can be attributable to two key reasons. Firstly, higher SGA costs in the B2C segment due to higher marketing costs to get your brand awareness up. And secondly, lower turnover, because the B2C customers, they use the equipment less, and there's lesser wear and tear compared to the B2B customers. And of course, we see that your company has taken the strategic direction to focus more on professional tools, and this has caused your EBIT and gross margin to improve over time. After deciding to focus on the B2B customer segment, we then understand which geographies we should expand into. And in doing this, we seek to understand the core competencies of your company. Firstly, you have a focus on value-added products, and by driving innovation, you are allowed to charge a slightly higher price premium. And in selecting which countries to go to, we have came up with two selection criteria. Number one, we need to go into countries that actually appreciate your product features, and these features are productivity, an emphasis on productivity and safety. And the second criteria is actually an appropriate level of geopolitical risk. And we actually quantify this with a combination of the three aforementioned factors. In doing this, we have actually prioritized the various markets into three tiers. And we will actually recommend your company to go into the tier 1 cities. And they are Singapore, Hong Kong, Japan, Korea, and China. Of course, we are not asking your company to go into all 5 countries, but we believe that there are favorable market conditions within these countries. In thinking about which country to go into specifically, we have done another alternative analysis, and we have came up with 3 decision criteria. Number 1, the market size for B2B power tools. Number 2, the relationship with your distributors and retailers. And we'd like to highlight the high score of China and South Korea due to your existing sales channel that's already in place. And of course, we also like to highlight Japan as one with a low score because of the licensing agreement you have with Ryobi Japan that prevents you from actually selling products in the Japan market. Yes.
Referring to relationship with retailers and distributors in China, what specifically are you referring to?
Thank you for the question. With regards to this relationship, we actually quantify it by whether you actually have existing sales effort in the Chinese and South Korea market. And from the case, it's exhibit 14 of exhibit 14. We can see that you actually have sales generated from the China and South Korea market. And in fact, amongst the Asian markets, these two countries, sorry, are where the bulk of the Asian revenue comes from. Yeah.
With regard to going to the Japanese market,
Yes.
Our industrial brand, you'd recommended industrial versus DIY.
Yes.
So the industrial brand is Milwaukee.
Yes.
So we actually can use the Milwaukee brand and go into Japan theoretically.
Okay, thank you for that insight. When analyzing our entry strategy, we believe that your company has always has a strong focus on stakeholder analysis. We feel that the Ryobi brand, the Ryobi Japanese company, they actually sell to B2B customers as well. So in order to not jeopardize this relationship, we feel that you should avoid the Japanese market as a whole. And on top of that, we actually promote China and South Korea because they have even more attractive prospects in those areas. Okay, moving on to the third decision criteria, we see that the third decision criteria is actually competition with brands that have similar positioning, which in this regard refers to international brands. And we feel that the China and South Korea market is suitable and have a high score because they have a fragmented market share within the power tool industry. In fact, in China itself, the top 5 companies have a combined market share of less than 10%. And this is about the same scenario as in Korea. After analyzing all these countries, we recommend that your primary expansion strategy should be in China, and we will consider Korea as a secondary market. After identifying China as the right market to go into, I'll now let Chao tell you more about our second eye infiltrating the Chinese market.
So in order to successfully infiltrate the Chinese market, we have to first look at the trends driving the growth. First of all, there's a strong growth in the construction industry according to the new China 2025 blueprint. There will be 350 million more new urban population, as well as 40 billion square foot of floor space being built. What this means that there'll be greater demand for your power tools, and this is the first key driver. The second one is the labor crunch situation in China. The migration of the rural labor is decreasing, and this will in fact cause greater wage costs of about 600% in the future. I mean, it has been experiencing 600% increase in wages. And what this means that this labor crunch will drive the need for productivity in China. And these two factors will imply that Chinese market is the way to go for us because there will be greater need for our power tools as well as the productivity need. So in order to enter the Chinese market, we first take a look at our current presence in the Chinese market.
Are there any concerns with a slowdown in the Chinese economy or depreciating RMB?
Yes, sir. Thanks for that question. So to the first part of the question, the slowdown in the Chinese economy, we do see it as a key factor in considering entering into the Chinese economy. However, we believe that the economy is still strong, is still growing at about 7%, which we believe the slowdown is temporary. Because our time horizon is in the 10 years, we believe that we can then mitigate this risk. So the second part of the question, may you repeat the second part of the question?
Renminbi depreciation.
Yes.
Sorry, allow me to settle that question. So regarding the exchange rate risk, because your company is inherently a MNC, currency risk is definitely a risk that you cannot mitigate. But in terms of renminbi, we can see that you can think about mitigating the risk by hedging both your cost drivers as well as your revenue by pricing your products into renminbi, but also look at your cost drivers in terms of the direct labor or the overhead costs. And if these are also pegged to RMB as well, and this ultimately will hedge the whole depreciating of the currency.
So moving on.
Then it would mean that our products will be more expensive as compared to our competitors, right? Because the renminbi depreciates, so they need to come up with more renminbi to buy our products. In that sense.
Sorry, so within China, you're saying that the price will decrease compared to our competitors? I mean, increase, sorry.
Is that if the renminbi depreciates,
Yes.
you're going to need
More,
more renminbi
yes.
to buy the product, so the product becomes more expensive. Or you keep the price the same, and then we make less.
Yes, so we believe that by keeping the price the same and we make less may be the way to go, because we can see that 70% of most of our revenue now is being generated overseas. What it means that with the depreciation of the renminbi, it means that our total cost of making the goods itself is lower in the global perspective. So we believe that by keeping the price the same, in ensuring that we will not change the cost as much, is the correct way to go. So moving on, looking at our current presence in China, we are very limited. There's a lack of distribution channel, and there's also a lack of awareness in China. A quick search on your Chinese search engine, Baidu, it doesn't return any of our distribution online. And the comments on forums typically refers buyers to unofficial sources, such as those on Taobao. So with this, today our focus on the Chinese market is to build better and stronger distribution relationship while gaining awareness to capture the entire Chinese market. So how will we do this? Code Consulting recommends a two-pronged strategy for you today. And this is built on what your CEO, Mr. Zhou, has previously mentioned. He has identified two key success factors for new brands in new market. First of all, there must be third-party endorsement. And we believe in that too. So first, we have a pull factor strategy. What we want to do is to create demand from end users. And how we'll do this is by communicating our third-party endorsements. And in communicating that, we have analyzed the different channels that we can take. And the best way we have found is through conference and exhibitions. And at these conferences and exhibitions, we will tell our consumers that we are good. We tell them about our value proposition, about the endorsements by our previous customers, and the awards that we have gained, such as the Hong Kong Business Award in the past few years. We'll also show them the productive equipment, the innovations that we have, as well as the warranty support that we provide. With this, we believe that we can then capture the consumers. So our second strategy also hinges on what your CEO has said. The owner of the shop tells us to try it, and that is very important. Here, we would like to strengthen your 关係, which is also relationship, in order to capture these people so that they will then push your products to the end users. And how we'll do this is by analyzing the 8 most important factors in what they require. Here, the top 4, you have currently do that. You have currently been doing that. And what's more important, your competitors are also doing that. They have a brand, and it's quite strong, and it's also tested and reliable. Therefore, the key differentiating factor will be the next 4 factors we have identified. That means we have to meet our distributors' needs. We need somebody they can work with, and we need somebody to constantly engage them for after-sales service. Therefore, today, Code Consulting recommends you to employ a new relationship manager. This person will bring in sales constantly and provide support to your distributors. He will also manage the different relationships that you have through networking sessions and trading support. And with this,
Sorry, yeah. Where can we find this person? It's still from competitors or what? Yeah, it's nice to have this person, but where can we find it?
Yes, thank you for that question. So, as a whole, China as a whole, we do not need to possibly steal from our competitors. We can look at different industries that they do have relationship management involved, and we are also looking at experience hire because we do not have the capabilities to train somebody in the form of relationship management. So we can possibly look at industries such as banks, who has very strong focus on relationship management. And by bringing such a person over, we will then teach him the technical skills involved in order to understand our industry, and with him, we will drive the relationship.
We have 4 on stage, right?
Thank you.
And bad news to Citibank. So.
Okay, so with this, what have we gotten ourselves? We've gotten ourselves a 2-pronged strategy focusing on pull and push factor. But more importantly, it's tailored to enter the Chinese market and is easily scalable. We recommend your company to move from first tier to the second tier city.
So after identifying the key market and infiltrating the market of China, we now look at how we can sustain our growth for long-term success. So our team see 3 ways to sustain this growth. First way is to increase the barriers to entry. The second is to differentiate our product from our competitors. And lastly, we seek to attract more consumers to use our product. And we think that innovation is the way to go. Sorry about that. And we see that innovation is the way to go. So looking at our current R&D processes, it's actually very reliant on internal capabilities. We source for talents, we look for new opportunity from our customers and technological trends, and we go through a series of tedious product validation processes. So this shows that our R&D process is a high risk with unpredictable returns. So actually, there's a growing trend of startups coming out with disruptive technology, and we can actually tap on this external capabilities to drive innovation as well. So let us take a look at an example. Ineco is a Dutch sustainable energy company focusing on innovation. They partnered with an accelerator, which is Startup Bootcamp, and in the accelerator, there are 10 startups in the program. And with that, they are given the opportunity to invest in these startups and acquire them if the products synergizes with their current offering. So the benefits that they get is that there's a lower risk exposure, a wider talent pool to tap into, and they are able to stay ahead in the technological trend. So we recommend TTI to start the accelerator program in Hong Kong itself. We have a strong network of our R&D team is situated in China, which is near Hong Kong, and we have a strong network of mentors which has come in to guide the startups. Furthermore, there's a growing startup scene in Hong Kong, and there's growing government support for innovation projects which we can tap into. So as such, with 2 innovation arms, one on the internal side and the second one on the accelerator, which is tapping into the external pool, there's a few possible outcomes that we can get every year. So from a Forbes statistics review, 1 in every 10 startups will succeed. And as such, that startup might carry a product that might carry something that can allow us to enhance our current product. They might also come up with a product that is relevant to our current industry, and we can use this product to provide our customer more range of products. And lastly, if they carry a product from a different industry, we can actually sell it away and get back and earn investment instead. So after looking at our 3I strategy, what is the financial impact? We'll be able to reduce our reliance on the US and the EU market with 16% revenue mix from the Asia market. And in the next 10 years, we'll achieve a CAGR growth of 8%, and this is mainly driven by the growth in Asia. So looking at our 3I strategy, firstly, identifying key growth market, infiltrating the market through a tailored approach, and innovating for long-term success, we believe that TTI will achieve an 8% sustainable growth in the next 10 years. Thank you. We are now open to questions.
Do you think that M&A is important or a good idea to consider in order to grow in any of these markets?
Thank you for that question. We have actually done an alternative analysis in terms of our entry approach into the various markets. And since we recommended to go into the Chinese market, we would like to do this analysis based on the Chinese market. So as you have mentioned, M&A is a possible entry method. But we feel that our entry method on developing relationships with the retailers and the distributors is a better approach. And we analyze this based on 3 key decision criteria. The first criteria is about cost. M&A requires a high capital outlay, and this might be a risk that your company is able to bear, but this is a negative factor that we have to take into consideration. The next factor we have to take into consideration is a strategic alignment with your brand's value proposition. Your company has always focused on value-added products, and we feel that the Chinese market at this point of time may have limited leading brands that are suitable for acquisitions. So we do not want to acquire brands that lead to a subsequent brand dilution. On top of that, we feel that in the Chinese market, you already have strong manufacturing facilities, so there's no reason to acquire a power tool company in order to acquire that manufacturing expertise. And as with regards to the last decision criteria, which is ease of implementation, we see two further barriers at the strategic level. Firstly, the first impediment is that in the M&A environment in the Chinese market is one where companies are bought with despite having a very high price to earning ratio. And secondly, this brands that are deemed suitable may not even be for sale. And of course, at the operational level, we see further impediments as well, because the M&A environment is one that requires more transparency at the moment, and we feel that you could potentially consider M&A in the future, but we think that our strategy of focusing on retailers and distributors is more cost-effective, and is definitely the more productive approach with regards to entering the Chinese market.
China is such a huge market, so where should we start?
Yes. So thanks for that question. So we believe that we should start at the Tier 1 cities, because the Tier 1 cities are where the productivity is needed, where the wages are highest. And that we will choose the various Tier 1 cities, for example, like Shanghai. And with that, from Tier 1 cities, we'll then move on to the Tier 2 cities. And can I go to slide 63 as well? So with that, we'll choose partners that are already currently situated near your Tier 1 cities, such as the one we have here, Ostratus. So they are people that do not manufacture, they just do tradings. So with that, that's our general expansion proposition. Thank you.
You mentioned before that I think it was 5 brands had less than 10% of the market share. Are you worried about a bloodbath over the next 5 years?
Sorry, can I clarify what a bloodbath is?
Sure. It means that everyone's going to compete on price because there's no other option. And so if there's 50 companies competing in the same space, only the cheapest with the best product are going to survive in the long term.
Okay, firstly, thank you for teaching me a new word. With regards to your question, we feel that the entire trend in the Chinese market is one that is very big, and it allows you to go in without actually having to compete directly with all the other competitors. And on top of that, there's a general trend towards focusing on productivity. And we feel that more Chinese companies will be more inclined to take up your product, because that is where the Milwaukee brand competitive advantage is. It focuses on productivity and safety. And as such, we believe that we do not need to compete on a price basis, but on a value by portraying our value-added features, and this will actually in turn generate demand from the consumers, and in turn we feel that there's no need to go into this price war. Hope this answers your question. Thank you.
Okay, question here. Yes, the company would like to expand, and we're looking into the possibility of the Asian market. During the course of your analysis of your research, has it ever come to your mind that we should forget about Asia? We should just focus on where we are doing now. We're making money in the other market, in the States, in Australia, in Europe. Has it ever come to your mind that Asia is just too difficult? We'll be investing too much, and at the end of the day, we are talking about profit and revenue. Should we just focus on where we're doing well now?
So with regards to that, we do see astounding CAGR growth in your current markets, especially the US and the the European market, and that is mainly, and then we did ask ourselves why we don't just continue focusing our efforts there, and that because we have identified the key driving factor as being as moving into cordless and your lithium batteries, which made the productivity of your tools increase, and with that, it caused greater demand for your goods, and the whole market increased as a whole. However, looking at Asia, we believe that without without a presence here, we are neglecting a huge bucket of gold, because in Asia you have no presence, and with the increase in productivity, as we have mentioned previously before that in China, we believe that your product will be increasingly relevant to drive this productivity growth, and with that, we believe that you should enter China and capture this growth as well.
All right, thank you, Team 4.